high dividend stocks in Bursa Malaysia for 2024. 2 high dividend stocks a week build up your passive income to replace your active income. These stable dividend stocks are currently giving 5% or above just for dividend returns. Kicking things off, we have Sime Darby. At the current price, dividend yield for the past 12 months at a respectable 5%. Sime Darby, with over 100 years of history and operations in 17 countries, involved in the trading, comprising of motors and industrial, logistic and other businesses in healthcare, insurance sector and also in investment holdings. It is a conglomerate. For the past 1 year, its stock price volatility is low. Good news for long-term dividend lovers. Now, how likely is this dividend payout can be sustained or even go higher in the future? For this, we look at its net margin. They are razor thin in the 2 to 3% range only. Between the financial year 2019 to 2023, Sime Darby profit growth had been erratic, bouncing up and down like a yo-yo. Disclaimer, this is not an investment advice. This is also not a recommendation to buy the dividend stocks cover, as I do not know your financial needs, circumstances, risk appetite or investment objectives. Then next, we want to look at these stocks dividend risk to you. For this, we look at a company's leverage and shows the extent to which operations are funded by lenders versus shareholders. Now, in the business world, a gearing ratio refers to a company's financial leverage, essentially how much debt they use to run their operations. Debt can help a business grow faster, just like in racing. Higher gears lead to greater speed, but too much debt can cause problems. If the interest rates rise unexpectedly, heavily geared companies can go bust overnight. Gearing is total debt minus cash divided by shareholders' funds. For Sime Darby, it is well aware that its gearing will be touching over 60% due to acquisition activities. However, management highlighted they have a solid plan to reduce its gearing below 60%, ideally in the 40% range, so that is some consolation for you if you're a shareholder. Next, Thaliworks Corporation. At the current price, dividend yield for the past 12 months stands close to 8%. 7% to be exact. Thaliworks is one of these boring companies that will never make any news headlines. Does this sound remotely exciting to you? Operations and maintenance of water treatment, supply and distribution facilities, and it also has concessions for the Sungai Selangor water treatment works phase 1 and for the water supply and distribution system in Langkawi. Apart from that, Thaliworks also a toll operator. It's also venturing into renewable energy businesses, and for the past 1 year, its stock price has been stable in the 80 to 90 cents range. So how likely is this high dividend payout can be sustained or even higher going forward? Now, for that, we look at the net margin. The most recent one is 19%, which is decent. In fact, its profit margin has always been in the 20 to 30% range. Growth wise, not really. In fact, it shrank 30% in the most recent financial year. For the past 5 years, profit growth had been up and down. The consolation for this is that Thaliworks Corporation gearing ratio is kept relatively low to below 30%. Of course, this may improve or worsen in the future. So if you want to be aware of future changes, do follow and subscribe. If you prefer weekly email update, there's a link in the description below or in bio. Questions, ask below. Here's your next high dividend stocks clip to watch. There's an entire series of this. Also check out more of these global investment strategy videos updated monthly only for CF Liu channel insider members.